פודקאסט מדברים קריפטו חוזר, והפעם עם לא פחות ממנכ"ל Chainalysis, ג'ונתן לוין. ג'ונתן הוא אחד מהדמויות ה-OGs של תעשיית הביטקוין והקריפטו, ולמעשה הקים את חברת המעקב הגדולה ביותר בעולם כבר בשנת 2013, כשזיהה שעל מנת שתהיה אינטגרציה בין ביטקוין ומטבעות דיגיטליים לבין המערכות הבנקאיות והפיננסיות, צריך שיהיה את הכלים, לפחות בעיניו, לאתר פשיעה, לאתר את הדברים הבעייתיים שאפשר לעשות עם קריפטו. אז דיברנו על המסע שלו, מה גרם לו להקים את Chainalysis, למה הוא דווקא הלך לכיוון הזה, דיברנו על המיילסטונים החשובים שהוא עבר בדרך, כולל הבאת החברה לשווי של מיליארדי דולרים, והגעה כאן למדינת ישראל, והקמת משרדים חדשים פה בעזריאלי שרונה, לכ-150 מעובדי החברה, הרבה מהם אגב בוגרי בלוקצ'יין אקספרט. אז דיברנו על פרטיות פיננסית ועל הפשרות שאנחנו צריכים לבצע, ובקיצור היה פרק פשוט מרתק, אני בטוח שאתם הולכים ליהנות ממנו. אני רק מזכיר, שום דבר שג'ונתן ואני אומרים לא צריך להיות המלצה לפעולה או יוצא השקעות, אלא אתם ילדים גדולים, קבלו את ההחלטות שלכם עבור עצמכם, וכמובן הפודקאסט עצמו קרא באנגלית, יהיה לכם תרגום יפה פה למטה, צפו בו בספוטיפיי, צפו בו ביוטיוב, וכמובן אל תשכחו לדרג ולשתף, ותהנו מהפרק. Jonathan Levin, welcome to Crypto Talks podcast.
Oh, it's great to be here.
So we are here in Israel in Chainalysis new, as in this day, new offices in the central of Tel Aviv. What brings you here, basically? There's a huge expansion, right?
Yeah, so we acquired two companies in December and January of last year, one called Hexagate and one called Alteria. And I learned a lot about office politics in Israel, which means that you can't cross the highway, you can't go too far from the heavy train, you can't go too far from the light train. It needs to be walking distance from this coffee shop, there needs to be a gym in the building, there's a lot of requirements. And so
happy hour bars.
Hour bars, you gotta be in the middle, there have to be 73 different lunch options. And so to be next to Sarona Market and to be around all of the people here and be in one of the nicest towers is a real pleasure and something that I'm super excited to bring the teams together as well as our local team here in Israel.
That's amazing. I'll take that question one step further and ask why Israel? So obviously there are a lot of cyber companies, a lot of privacy data companies all over the world. What brought you specifically here and to make your statement, basically?
Yeah, so we have been working a lot in Israel for a long time. We have been serving both the industry on the crypto side for a long time, as well as the financial services firms, the government, to help them understand what's happening in crypto and secure the crypto economy and Israeli public safety. So we have been working a lot in Israel. And when I looked at the companies that were doing the best job at preventing criminal activity from happening on the blockchain, I really found two companies that were doing this the best. One on the security side, so preventing hacks from smart contracts and helping people secure their wallet infrastructure, called Hexagate. And then I found another one that was preventing scams from affecting cryptocurrency users and actually regular financial users. And that was called Alteria. And when I found them together and I could see that actually those four founders would work really well together, I said, let's do, as you say in Israel, let's do a combina and actually bring it together. And these teams will be able to execute on our plan for Chainalysis to move from investigation to prevention for the industry and to help actually prevent bad activity from happening.
That's amazing. That's incredible. So I'm happy to hear that. I'm happy that the local industry is continuing to grow and as I usually say, despite the regulators and not thanks to them, because eventually there are a lot of hurdles in operating in Israel in the crypto space. So making that statement as a big international company, that's very beneficial for the industry, and thank you for that. So I want to take you back, I think 12 years or probably even more than that, to when you first discovered Bitcoin. Can you share the orange pill story? And was it the orange pill the first moment, or did it come later?
Yeah, I would say like I have a less of an orange pill story, like maybe more of an orange liquid story. I was in a pub in Oxford. I was a graduate student doing economics, and I was at the pub with my friend Tom, and we would go out to the pub and have a drink, once a week, something like that, and we talk about everything in life. And one day he turned around to me and he said, we need to start arbitrage trading Bitcoin between Mt. Gox and Bitstamp. And at the time, this is in sort of late 2012, the arbitrage opportunity between Mt. Gox and Bitstamp was maybe like 5%. And so you could easily, if you had liquidity in Japan and you had liquidity in Europe, Mt. Gox was based in Japan at the time, and you could actually make like 5% on just an arbitrage trade. And I didn't understand what Tom was saying. So I didn't understand what Bitcoin was. I didn't really understand what arbitrage meant at the time, even though I'm an economist. But I went and started looking into Bitcoin. And I would say that I wasn't sold immediately on Bitcoin as a long-term asset that someone should hold. I was really sold on a different premise. I was sold on the premise that Bitcoin really asks the most important questions about how money should work, how payment systems are built, and how does the internet actually secure itself, and how is the internet structured. And these were questions that I was very interested in, and I would say fuel my sort of adventure in crypto every day. Is that I think about the solutions that people put forward to make payments cheaper, to make financial services more efficient, to think about the ways in which money can become more programmable. And all of these solutions are really at the core, for me, a product question about like, well, what is the question you're asking? What is the problem that you are trying to solve for the end user? And so this is something that I really found with Bitcoin immediately, was it asked the best questions of our existing financial system. And maybe it didn't provide all the solutions to those problems, but it was challenging those assumptions, and it was inspiring people to build solutions to make payments cheaper, to make remittances more cost effective, to make trading more efficient. And so really what we've seen over the last 12, 13 years is that entrepreneurs have taken these sets of problems that Bitcoin itself was challenging the assumptions about how the systems work, and we've really leveraged the underlying technology to produce these efficient trading systems, efficient money movement systems. And, that's what keeps me sort of really excited about what's happening. And yes, I've eventually become a lot more convinced that Bitcoin is a good asset to hold for the long term.
What would you say, where are you at on the crypto versus Bitcoin narratives?
I think that fundamentally, I think about this as now a technology movement first and foremost. And I think that when you look at the majority of blockchain transactions that happen today, they happen in stable coins. And the idea for me that this is something that has a big impact on the world and it has an impact on global GDP, it has to be in the amount of transactions that are being processed. And so I think that for me, it's very much about how we can grow those numbers of transactions and putting real money, putting real assets, putting real financial instruments on the blockchain is the way that actually this becomes a technology that impacts the world. And so I am more inclined to think about myself as a crypto entrepreneur. Chainalysis supports, millions of tokens. We support tens of blockchains. So we are, we maybe started in Bitcoin, but we are really today a crypto company that supports everything.
Obviously. Okay, so you discovered Bitcoin, the arbitrage opportunities, it led you down that rabbit hole, and then eventually you found yourself starting a company in the space, and you specifically chose to lean on Bitcoin's open, transparent ledger and characteristics to track transactions. Can you tell the origin story of Chainalysis? Why did you choose that line of entrepreneurship?
Yeah, so we started Chainalysis not with sort of a very clear understanding of exactly who we were solving the problem for. For me personally, when I saw Bitcoin's transparent nature, I knew that there was a business to be built for someone that could understand how and why people are actually using this technology. And if we could package up that information and provide that to whoever needed to make a decision based on investment, based on investigations, based on risk, fraud, compliance, like we could become systemically really a very important company inside the industry. And so really at the core of it, it's about understanding the nature of the technology, and then building a business that takes advantage of those unique attributes to then build something that can be analogous in lots of different markets across the world. And so that's something that I thought about even way before Chainalysis. When I first came across Bitcoin, I knew that there needed to be this type of company. And so when I met Michael and Jan, my two co-founders of Chainalysis, each one of us came from a slightly different angle. Michael was a co-founder at Kraken. Jan had built the original Android Bitcoin wallets. And really the three of us had both the technical aptitude, the business attitude, the product vision to build the platform that everyone would then understand how and why people are using cryptocurrency. And, for me, I very quickly figured out that the main users of this information were going to be, governments on the one side, making sure that we could have a regulated market for crypto assets. And, on the other hand, the businesses that were providing services to the market, allowing people to buy and sell and trade cryptocurrency, and that everyone that we provide this information to would then act on those decisions and that information. And that's really what drives how we think about Chainalysis today, is that really we're here to power the most important decisions that happen inside the crypto economy.
Amazing. So even though most of our listeners and viewers are oriented in crypto, perhaps we can give a small brief on what Chainalysis does, what's your influence today in the industry, just so we can get a full grasp of the scope.
Yeah. So when I say we want to be the company that knows the most about how and why people use cryptocurrency, really what this means is that we need to understand everything from the largest services that are providing cryptocurrency services today. These are the largest brokerages, the largest exchanges, the largest payment companies. We need to understand, and we provide the data to the industry about which transactions those services are making on the blockchain. That information is not public. That is information that Chainalysis provides to the industry so that people can understand the origin and destination of transactions. But we understand not just the major services, we actually understand everything down to the intricate ways that smart contracts work. we understand exactly how every single piece of the blockchain is secured, how money is moving across smart contracts, and how stablecoins are being issued and secured. And really, we create this data platform that allows us to understand the most micro movements on the blockchain to the largest transactions and biggest economic flows between countries and services. And what Chainalysis then does is we package up all of that intelligence and we provide it in workflow products to the largest enterprises, so those big payment service providers and exchanges, to government agencies that are interested in understanding the flows of cryptocurrency or investigating criminal activity or terrorism to do with cryptocurrency. And we secure all of the ways that the businesses are actually transacting on the blockchain. And so whether that is securing the wallets that they have, or whether that is, helping secure the smart contracts they're deploying, we are there in line of the transactions, providing that intelligence to all the different types of players that are, interacting with the blockchain today.
So you have a lot on your plate.
We have a lot on our plate, but I think that we have become systemically one of the most important companies at actually bringing security and trust to the blockchain ecosystem.
Yeah, absolutely. So from an entrepreneur to an entrepreneur, we know that the markets here move in cycles, and they are, to say the least, very, very volatile, and it can be very volatile for the business as well. I was wondering if you can share some key milestones from your experience as an entrepreneur, like somewhat of a before and after moments on your journey on Chainalysis.
Yeah, I think that the interesting thing about Chainalysis is that we have created a business model inside the industry that is extremely resilient to market cycles. Like, I haven't had the experience of, the super high highs and the super low lows of the market cycles. We have built a very robust business where the largest players, whether those are government agencies or businesses, constantly rely on our intelligence to make their work happen. And so we are business critical in every process that we enter, and we are, existential really for government agencies that use our products. And so we have found that Chainalysis is extremely resilient, and I constantly tell our team that I think very long term in terms of being able to partner with customers for that long journey. And, there have been times when market cycles turn and we do more for our customers to help them through those hard times, and we understand what that means. But we think very long term in terms of actually making sure that we're partnering with people that are also in the space for the long term. And I think that the advice that I have for entrepreneurs, constantly when I see the crypto industry, is that this is about growing the GDP of the world. Like, this is about producing economic value that goes outside of the price of a token. Like, this is actually about, can you create sustainable, durable revenues from the activity that you're doing? And as long as you focus on those things, you will actually be able to, endure some of those like harder market cycles. But yeah, I've watched, Chainalysis has been around for 10 years. So I've watched Bitcoin go from, $100 to $250 to $1,000 back to $250. I've watched, things happen over these market cycles that, I've watched some of the largest hacks happen in real time, where you have Bybit this year, or watching Mt. Gox collapse, or watching, Bitfinex get hacked. Like, we were there in all of those moments, helping people, making sure that we can help protect the industry. And, we've been there in the dark times on, through everything. But actually, I think that people need to understand, like, this is not going away. And, when I look at the industry today versus the industry in 2014, it's unrecognizable. The level of the players involved in the industry today will carry us through any cycle or any problem that we have in front of us. And really for entrepreneurs, it's about understanding what is the fundamental value you're providing and believing in that long-term opportunity.
And those of us who know what field we're playing on also know that it's just the beginning, if we put it in simple terms. So basically, as we just mentioned, the industry has evolved substantially, and now we have banking players and financial institutions and governments involved. And with them also came the regulatory restrictions, the travel rule, the FATF involved, all these, the Genius Act now that's passed. What would you say was Chainalysis' role in this evolution? Like, because you did play a role there, and how would you differentiate it between the private and the public sectors?
Yeah, there's a long history here. And I think that this is something that many people don't understand about the role that Chainalysis has played in terms of the policy landscape. And I'll boil it down to a couple of factors. One is the policy landscape would never have evolved if the government in the first instance would not be able to investigate criminal activity on the blockchain. The policy response to crypto, if governments did not have the ability to follow the money in crypto, would have been blanket bans, and they would have been attempting to shut off the world from cryptocurrencies. The fact that the government and law enforcement agencies in particular were able to follow the money in crypto, in Bitcoin and Ethereum and others, means that then it opens up the avenue for actual regulation, actual businesses being tasked with responsibilities to collaborate with law enforcement. And that's where Chainalysis has demonstrated that really these businesses with the right tools and technology can be more effective at preventing financial crime than actually banks can be on traditional fiat rails. And this is an argument that we continue to push and continue to educate people about, which is it is possible to follow the money more effectively globally at a faster pace on the blockchain than any other financial instrument, whether that is cash or bank transfers. And so we have managed to provide solutions to the industry that have helped the industry demonstrate that they can prevent bad activity from happening on their platform in the first place, or report suspicious activity once it does happen on their platforms. And that has led to government agencies around the world actually putting in rules and frameworks to allow the industry to continue to develop whilst limiting the bad activity and whilst getting rid of the abuse of cryptocurrencies by criminal actors. And so, that is like sort of the second part of what we've played, is we've provided the tools to the industry for the industry to demonstrate its commitment to getting rid of bad actors and its capabilities to be able to mitigate some of the risks that are always there when it comes to touching money. The third thing that we have done really is that we have spent time educating policymakers. And I know that you do a lot of this here in Israel. We do a lot of it in Israel, around the world, helping policymakers understand the actual level of risk that is associated with this type of activity. And I think that once we have been able to effectively show this, that there are different levels of risk that come from cryptocurrency, and not all of it is higher risk. A lot of it is actually lower risk than in traditional financial products. And once we can do that, we can actually have a more practical regulatory framework for the industry that we as Chainalysis have been pushing for actually 10 years. And it's really important to understand that we are now at a level that was hard to even grasp 5 years ago. If 5 years ago you would have told me that we would have legislation passed in Congress about stablecoins, I would have told you that you were mad. And here we are with a very clear mandate, with bipartisan support that this is something that needs to happen for the US economy, and that large institutions are going to be able to issue stablecoins. Like, we're now in a position where this technology has been acknowledged as like a real opportunity for business, and the government is putting around the guardrails to make sure that it is actually going to work for its citizens.
So I want to push back a little and challenge you.
Yeah.
Because when we started talking about the orange pilling or the orange liquid drinking, you talked about how Bitcoin essentially provides us with somewhat of a mirror of how money works, of how financial and payment system works, how the internet works. And you obviously know that Bitcoin is, Satoshi Nakamoto was basically a cyberpunk, even though we cannot specifically name who it was. We all understand that Bitcoin evolved from the legacy of combating regulation, combating government restriction, combating basically the battle against private innovation, private transaction, privacy as a whole. And what I fear, and this is where I want to hear your opinion, is that we are essentially creating the tools that enable to stay in the same system, because it's those regulations that mainly cost payments to be so slow, so expensive, because the financial institutions that provide it for us need to pay the money for the compliance officers, for the tools that they use so that they can do it. So by essentially accepting those legislations, by creating software like Chainalysis and those tools, we are also enablers of the recapturing of the system as opposed to reshaping it. So what would be your take on that?
Look, I think that when you read the Satoshi white paper and you see what the innovation is, there's clearly an ideology behind it that maybe was part of the intention, but actually, like, the technology itself was about decentralization. It was about getting rid of the middleman, or at least creating a system where there could be as many middlemen as you would want to have in a system to create competition. And that is actually where I think the ideology has come with the industry, which is the industry is all about making payments easier, making payments cheaper, making payments more global, making it much easier to complete whatever task a human, or now maybe even an AI agent, wants to accomplish with this payment. And so at the base level of the protocol, I'm a very strong believer that the protocols should be open and permissionless, that people should be able to participate in these protocols no matter sort of where you are in the world. But as soon as you get into like holding money for someone else and providing that level of service that, you're handling someone else's money in an arrangement that is not inside the base level of the protocol, you have some expectations that you need to be able to meet in order to be able to provide that service to that customer. And I think that when it comes to that, we at Chainalysis feel like we are an essential part of providing services to those service providers to help them actually provide a better customer experience to the end user, and preventing them from sending money to scammers, and preventing them from sending money to wallet drainers, and from preventing there being greater fund loss on these exchanges because of compromise and security vulnerabilities. And so, for me, the philosophy at the end of the day for the industry is about saying, how do we create a base level protocol where everyone can participate and everyone can compete? And then depending on what services you're offering, some people will be regulated like banks. Some people won't. And some people will hold money for other people. And to the extent that you are holding other people's money, we should make sure that you are doing things that help provide the right level of service to those end customers. And that includes providing Chainalysis to prevent fraud, to secure transactions, and to comply with regulatory obligations if you're holding other people's money.
Okay, I respect that. I guess it's a level of where you stand on the philosophical level and how you want to battle with that. How do you guys basically try and prevent malicious actors from using your tools in order to track, for example, rich people crypto wallets so that they can scam them or they can $5 wrench attack them?
Yeah, look, we think about it a lot. I think that when you build a company like Chainalysis and you build powerful tools, you have to think about red teaming and thinking about the ways in which it can be abused. In the end, like a lot of the types of attacks that can be perpetrated are largely based on information that are stored inside central exchanges. So we at Chainalysis, we don't hold information about individual users and where they live and who they are as individuals. That information is stored at exchanges and venues. We look on the blockchain for publicly available information that you can track and trace. And so there is a slightly different impression between what maybe some people think that we store compared to what we actually store about individual users of crypto. But in general, we think about, we vet our customers and make sure that they are intending to use our products in the way that we expect them to be used. We also think that that's just good business too. So I think that when you think about, building a business like Chainalysis, like we want to be working with people for the long run. We're here for making sure that we're providing that safety, security, fraud prevention to the largest institutions out there. We work with builders too. We work with small companies too, but we make sure that they are people who are interested in growing with the long run.
I see. All right. Let's stay on the privacy path because obviously that's a theme for this episode. And let's talk about the battle between different types of money right now, right? So we have the Genius Act passed in the US and the obvious statements from the government officials of adopting stable coins as a tool, let's put it simply, as a weapon to expand the dollar dominance even further than it is right now. And on the other hand, we have the European Central Bank pushing very, very hard for a digital euro. Will be programmable, will not be programmable, will allow private transactions, will not allow. We all, or at least most of us, know where the path of the digital euro goes or leads. And it's a complete battle between decentralization and having transparent stablecoin issuance on a public ledger that everybody can see if one bank or one stablecoin issuer is conducting its business in a malicious way or some sort, as opposed to the digital euro, which we expect for it to be a private permissioned system with a lot of control. Where do you stand? What's your take against or for CBDCs?
I think at the end of the day, there are going to be, as you say, like great competition between different monetary instruments. And there will be some monetary instruments that are going to be very useful for a payment context. There will be different monetary instruments that are used to settle high stakes financial transactions. And this is something that people need to get used to when they think about one size fits all. There isn't one size fits all even in traditional payments. And so the idea that there's going to be one payment system to rule them all is not very realistic. And so I think that it's very clear to me that stablecoins as a particularly retail-focused payment instrument that is very efficient, it's very flexible, that can be used anywhere, is like a really exciting proposition and something that will continue. I think when it comes to interbank settlement of liabilities and different types of financial instruments that come from that, yeah, maybe there is a role for more private blockchain type book entry systems and currencies. But this is something that I think is maybe misunderstood, is that it's not one or the other. It is actually that,
depends where you live, though.
Yeah. But even in Europe, we will have stable coins. Even if it won't be issued by the ECB, Europe will have stable coins for retail payments at a lower threshold of what the guarantees behind that euro token is compared to an ECB, a European Central Bank, CBDC, like a central bank digital currency. So like those will have different promises behind them. But my expectation, very much so, even if the European Central Bank goes in this direction, will be that they will be forced to also allow for stable coins in euros to exist within the European Union.
Are you not fearful in a way for human rights and basic financial privacy and permissionless systems that eventually CBDC might start as something smaller, and then as more governments under the European Parliament and Commission, the more they adopt it, the more it becomes more liabilities on their balance sheets, and then they can essentially introduce more regulations embedded, programmable in the money, and eventually block you from using every other thing. As you said, you're a long-term player, so I want to...
My long-term thinking about this is that like there are mechanisms when you think about like really, and I don't want to get too technical or philosophical about it, but if you think about it, there are the level of control and promise that someone stands behind when a European central bank promises to redeem one for one is going to be different than a retailer that gives you store credit that tells you that they're going to redeem one for one. And the difference between those will be the difference on the types of use cases that you will need. In order to pay for something at a shop, you don't need a guarantee from the European Central Bank. It might be fine to have that guarantee come from a local payment company, given that that's how you use it today. And so I think that when you look at the context of payments, there is these different use cases that already exist in the world today. They already have different levels of control, different types of liability, different types of stability. And really, if you think about it, we're in a zone where we're going to have a lot more choice moving forward than we have today.
Sounds good. I want to ask two more questions before we wrap it up. Speaking of the future of blockchain and crypto, we see that there are a lot of technical evolutions. You said it yourself. We are in the tech space, right? So we see zero knowledge cryptography getting adopted by layer twos, by companies like Israeli Starkware, etc. We see bridges being used as facilitators as mixers, essentially. How does Chainalysis combat this?
We have like a very active research agenda across the industry, whether that is zero knowledge or whether that is understanding bridges. We build technology that helps people understand some of the ways in which money is moving through those systems. And I think that, it's important for Chainalysis to continue to research and understand both the strengths of those systems, but also the weaknesses of those systems. And, at the end of the day, my feeling is that the majority of people want a great product at the end of the day or for a problem that they're trying to solve. There are obviously some people that care very much about, financial privacy for a particular set of transactions, and that's totally legitimate. But there are, lots of people that are, adopting other types of, payment instruments. And if you look at sort of the overall market, I would tell you that the overall market is the majority of it is not in privacy preserved cryptocurrencies. And even though they've been around for a really long time, they haven't become that much more popular. And so I think that some of the ways in which we're working today helps identify the limits of some of that technology. But in essence, I actually think that long term, the industry moves in ways where the majority of payments are like it just is all about like how do we increase the number of payments that are happening in general. And that's something that maybe Bridges actually helps grow the industry. But we have good ways of understanding how those things work and providing those insights to customers.
Cool. So the last question I want to ask you is more for the retail audience, right? So when we teach about blockchain explorers in our course, we always stumble upon the fact that if you as a private user want to accept a peer-to-peer transaction, you want to check on the Block Explorer whether you are being paid with labeled money or something that was associated with fraud or terrorism or sanctions, whatever it may be. But there are limits to what you can do with free Block Explorers and free data that's out there. What kind of tips can you give to the standard retailer, whether if he's transacting peer-to-peer for payments or for buying and selling crypto outside of the regulated system, or just for usage, how to use crypto properly in terms of privacy?
I think when you think about like an average business, sometimes it may make sense to have a level of, trust placed in a payment service provider, whether that's, Coinbase Commerce or something like that. Like, not everyone needs to rebuild Coinbase, Shopify, Stripe, those types of services. And so to the extent that, someone wants to have a really seamless experience for accepting a crypto payment, now all of the payment companies will add cryptocurrency as a rail for you to be able to do that. And so, I don't think that there's like a big tension between these things, at the sort of like micro level. Yeah, there will be some people that receive money from a friend and you want to know whether that friend was maybe sort of good and bad. And I think that, at the end of the day, depositing at an exchange or talking to your exchange about those things is something that, it's something that can happen and does happen.
But then you get your account frozen. So for example, I heard about people buying peer-to-peer Bitcoin, receiving it directly to their Binance account or to their Coinbase account, etc. And then the exchange KYT or other tools, they identify that the money came from somewhat of a fraud and it's labeled, and they freeze the account, go to a judge, go to the police, go do whatever you want in order to unfreeze it.
Yeah, I think that, look, like those situations are tough. And I think that it comes down to really knowing what you're doing with this stuff. Like, yes, it should not be the case that you buy a traceable asset from someone that you don't know at all and you don't have any background about who they are and you have no record of the transaction. Like, people need to understand that buying and selling crypto assets are buying and selling like financial instruments. And so I think that at the end of the day, like, sure, some people may be able to trade in some markets peer to peer, but you got to make sure that you're doing things correctly. Like, it's an over-the-counter trade that you want to be very serious about how you document that, what evidence you're collecting, what KYC you're collecting on your own side to ensure that then the next transaction goes through. And so I think that, when it comes to these things, like, I don't think there's an armchair blockchain tracing role to be had. There's really just being sensible about who you're buying Bitcoin from and do you understand the context and documenting those things effectively.
Awesome. Jonathan, thank you so much. This has been amazing. Is there anything you want to add? Something you think we might have missed?
No, I think that we covered a lot of the main topics that I think are important for the global environment. I think that, I think Israel has a really exciting scene of both Web3 developers building, awesome stuff, whether that's Starkware or Fireblocks or, any of those companies. And I think that there's, still a lot of innovation happening within the Web3 context here in Israel. I think that there have been some wins on the policy side to actually, mirror a little bit about what's happening in the US. And I feel pretty positive about, the Bank of Israel and how, banks at large in Israel are warming to the idea of actually being able to accept and understand and manage the risk of cryptocurrency and maybe even custody cryptocurrency for their customers. And, I'm excited also about the government's fluency in being able to, seize cryptocurrency in criminal cases and terrorist financing cases. And, the government's been successful at seizing money from Hamas and Hezbollah, and making sure that we can continue to protect Israeli society, but also encourage entrepreneurs to flourish here and for the industry to continue to evolve. And I'm super proud to be a part of it and seeing what the future will look like for the industry here in Israel.
Amazing. Thank you so much, Jonathan.
Yeah, thank you so much.